every once in a while I get a video idea that's just kind of like calling my name, and it's so much different than the normal videos I put out, and I feel like this video here today that I'm recording about 2 a.m. To be honest, and usually if I'm recording this late at night, I'm feeling pretty inspired by a message I want to share to folks out there. It's been a very devastating year to folks that are longs out there in the market. You might be down thousands of dollars. You might be down tens of thousands of dollars. Some people are down hundreds of thousands of dollars this year. And some folks, like myself, are down millions of dollars this year and have been hurt considerably in the market, right? It's been a pretty awful year to be along, to be quite frank. It's been devastating, right? And so I feel like a calling to record this video here at a very late hour. And the reason I do is because I think there's a message I need to give out there on where do we go from here. We have been wrecked. Let's just call it that. And where do we even go here? Where do we pick up the pieces in? How's my thought process move as we kind of move on to then 2023 and move on from here, essentially, okay? Now, first off, I just wanted to show the devastation because I think sometimes it's good to see just to kind of get an understanding, right? And I put a bunch of different stocks up here, some super mega caps, some mid caps, some small caps, just to kind of see how bad they've performed year to date. Google stock 32% down, Microsoft stock 32% down, Walgreens stock down almost 40%. It's an extraordinary move for a stock like Walgreens. Super low PE, super high dividend, super safe business model, and a cash flow machine, and it's still down 40% year to date. And it wasn't even like this is some high valuation name going into this mess. Tesla stock, almost been cut in half this year, down 45+% this year. Corsair down 46% this year. Adobe stock down about 50% roughly this year. Palantir stock 56%. Honest stock 59%. I've added that one on because that's obviously a stock I've been buying heavily this year, and I thought it was worth showing there. Nvidia stock over almost 62% down this year. Meta stock down 62% this year. Netflix stock down 63% this year. AMC stock, I don't think there's very many people that watch my channel that own AMC stock, but I just thought I would show that because it was such a huge like retail related stock in obviously 2021. That stock is down 64% year to date. The Chef down 70%, almost 71% year to date. Shopify down over 80% year to date, okay? And I mean, just stocks everywhere are down, 40, 50, 60, 70+% this year. It's been absolutely awful if you're long out there, okay? So the question is, where do we pick up the pieces? Where do we go from here? What's, how do I even view this, okay? So I think this is important. I hope you guys enjoyed this video. I appreciate every single person that's subscribed to the channel, even in a year like 2022, okay? Which is not usually a fun year for longs. So the first part of this is we are now in the despair phase, okay? And in the despair phase, everybody acknowledges what's happened. They've been wrecked. And they start to view this as am I selling out and calling it quits in the market? And there's definitely been a lot of people that have done that, based upon all the numbers you look at, whether we're talking about margin debt, whether we're talking about, certain terms that are Google Trends out there that are giving telltale signs, whether you look at something like Robinhood that's lost millions upon millions upon millions of users. It doesn't matter what metric you want to look at. Everything's been devastated. I even went on Wall Street Bets because I was just interested to see how much activity is on there versus a year ago or something like that. And it's like a ghost town compared to what it used to be back in the day. You can't even compare it. It's like night and day from where that was, a year ago, year and a half ago. Not even in the remote, same ballpark. It's incredible what's happened there, right? And so we're now in that despair phase at this point in time, which is everybody's just looking around, and a lot of people have left the market, and the rest of the folks are like, man, where do we go from here, man? And it's a frustrating phase to go through when you're in the despair phase, but it's needed, right? And we've already been through basically everything else as far as the retail crowd goes. The fear, capitulation. It was more of an orderly capitulation in the market, right, than some other markets. But definitely we went through it all, right. And at first, when the market first started going down, it was kind of more of a denial phase, and then Russia-Ukraine happened, and that's when everything really went south, right? And things really started to get ugly into the summertime and obviously into the fall time as well, okay? So we're in that phase now, okay? Part 2. I took playing poker serious for about a year or two, and I don't know why. It's just like was kind of calling my name just to take it serious and kind of like understand game theory and a lot of different things. And honestly, I learned a lot playing poker that I think is definitely helpful to the market. There's so many little tricks and ways to view playing the game of poker and understanding it and making yourself kind of almost a better investor and understanding risk reward and things like that. And in poker, there's an interesting thing that happens when somebody gets down to their last few chips. Let's say they bought in with $1,000 and they're down to $100. Well, what happens is a lot of people just kind of like, the way they'll play is very not intelligent. Let's just call it that, okay? That's a nice way of putting it. Not very intelligent. They just get real sloppy with it and kind of just fire off the chips at the end and take some crazy risk, right? Because they've lost like 90% of their money. So they're like, I don't even care at this point. Like, they just bet crazy. They play completely crazy at this point in time, right? When in reality, if they play a little more intelligent, they could actually potentially build back their stack, right? A few things go their way. Next thing you know, all of a sudden, maybe they're back to $1,000. Maybe they're back to more, right? But instead, most people just are frustrated. They're down and out, and they just fire the chips away, okay? It's not something you want to do in the stock market. If you were down huge on positions, it doesn't mean let's just fire it away and just, I don't know, let's risk it all in a call option now. Or let's just go all in a stock with this last bit of money or something like that, right? Just not a smart strategy. And that's, something that can be very, very devastating to a person's psyche, and it's almost like basically admitting defeat at that point in time, right? And at that point, if you're already to that place, you might as well just take your money and run, because firing the chips away recklessly like that is not a smart decision, okay? Part 3, you're not magically coming back to where you used to be overnight, okay? That's not happening. And I put a picture of a guy that's injured here, because no different than if you get injured, right, and I don't know, you break your leg or something like that, you're not magically going to go out running tomorrow. Like, it's a process. You have to build back stronger, right? And in the market, when you've been through a vicious bear market, a crashing market, whatever you want to call it, and you've been racked, right, in terms of your portfolio, you're not magically overnight getting back to where you used to be. It doesn't work like that. This is a process that has to build back. I experienced this in 2015 when I basically took a year off from work and things like that, and I started getting into a lot of dumb stuff. And essentially, it took me a couple years to build back to where I used to be, right? And then reach new highs. So it's not happening magically overnight. It's a process that will take time. And if you view it as that, and you view it as this is a process that it's going to take a while for me to get back to where I was, and then I'll go higher from there, you can begin to come to grips with the fact that you're going to get back there. It's going to take time, and it's going to take a process. The folks that are unrealistic with it, and they expect to get back to their accounts where they used to be, and then new highs like overnight, those are the folks that, usually kind of go into part 2, right? Where they fire off the chips, because they start taking risk that maybe they shouldn't have taken, because they're trying to get it all back now, right? And they're not really thinking about things on a practical level. Remember, this is a process, right? Part 4, more income than expenses. And this is my number one thing I always preach if somebody wants to be an individual stock picker, is make sure you have the more income than expenses, right? And right now, it's obviously extremely, extremely important. And the ones that stress the most, I have found in the market usually, are folks that don't have more income than expenses. Because the folks that have more income than expenses, you're always in a position of power. You're always able to buy stocks, right? And that's why, going into this year, what's the thing I preach going into this year, right? I did a video back in January that I was prepping for a recession, right? And I was prepping all my businesses for recession. And it looks like we're likely there, just to be quite frank, right? And I know they didn't call it a recession, but we basically been in a recession. So that played out, right? But another kind of viewpoint on this, right, is I told folks, like, this is a year to make as much money as possible to plug that money in the stock market, right? And so if that means side income streams, if that means side businesses, whatever it means, like get your money up in 2022, right? It's a year where jobs are still plentiful, and you got to take full advantage of maximizing income in a year like this so you can put that money in the market and grow that money over time, right? And buy assets that are at considerable discounts. And I hope, at least a few of you guys have taken that opportunity and worked your tails off this year, and whether that means more hours or side jobs or side incomes or starting a side business, whatever it means, to kind of get your money up and get your income to a better place week after week, month after month, because these rare crash years don't happen very often. So you got to make sure you take advantage of them. And when you have money-making opportunities there, you got to understand every $1 you make that you potentially put into a stock could actually be like $3 and $5 in reality, right? Because let's say you're picking up an asset, a stock at a very depressed value. Every $1 of income could actually be worth $2, $3, $4, $5, $10 potentially, right? And imagine you were in the 08-09 crash, right? And let's say you had a job, but then you're also doing some side gigs or whatever, right? And making money on the side. So you're plugging in that money into different stocks out there. Well, within 3 or 4 years, many stocks had double, triple, quadrupled, 5x in terms of their stock prices, right? So if you were funneling money in and buying those assets as they were crashing, right? Each $1 you put in was really worth like $300, $500. For every $1,000 you put in, that was really like $3,000, $5,000 you were really getting back, right? For every, let's say, $100,000, it was really like $300,000, $500,000 you're getting back. And so that's the way you got to really view this thing. Income and expenses is absolutely very, very key always, but especially in this sort of market. And it will lead to a lot less stress in a down market, okay? Part 5. I always love this one. It's always darkest before the dawn. It's always darkest before the dawn. And this is so true in the stock market. And I've been part of some pretty nasty markets, to be quite frank. Obviously, when I first started, it was a nasty market. Then I went through the double dip recession fears. I went through the 2015, which was a little more of a self-inflicted, very tough year. I went through, fall of 2018, which was very, very rough. I went through the March of 2020 crash. That was very rough, right? And what I've always just found is it's always darkest before the dawn. And usually when you're thinking about giving up and throwing in the cards, right, that's usually around the time things turn around. So do always remember that the sun will come out, the sun will shine again, the stocks will go up again, the market will go up again, and it will be brighter days. But, it's always darkest before the dawn. Part 6, zoom out. Zoom out a little bit, and you realize how ridiculous it is that we freak out over these short-term crashes, right? I pulled up a 20-year chart on just some big popular stocks, right? Netflix, Tesla, Nvidia, Adobe, Nvidia, Shopify, Microsoft, Meta, AMD, and Google. And, if you pull up a 20-year chart of these stocks, right, Netflix is up 20,000%. Tesla's up 13,000%. Nvidia's up almost 2,000%. Adobe's up 1,700%. Shopify's up 855%, right? Shopify wasn't even a public company most of that time. Neither was Tesla in some of these stocks, right? But still incredible performance. Microsoft, 500+% up in that same amount of time. Meta was only a public company for a short amount of this time, right? Up 330%. In AMD, 264% up. Google McDougal was only a public company for part of this time, up 253%. Sometimes you just got to zoom out a little bit. If we look at the past 10 years and we pull up a 10-year chart, right? Zoom out a little bit. Tesla, 10,000% gainer in the past 10 years. Nvidia, 3,200% gainer. Netflix, 2,100% gainer. AMD stock, 909% gainer. Shopify, 855%. Adobe, 784%. Microsoft, 600%. And this is after these stocks have all crashed. Think about that for a moment. They're not even close to what they were. Tesla was at an 18,000% gain. Now it's only at 10,000%. Gosh darn. Nvidia was at a 9,000% plus gain. Now it's only at a 3,000% gain. Oh man, that stinks, right? So that's just some food for thought there. You got to zoom out at these things and really understand the game that's being played, and that, if you got a little longer time horizon, oh man, it's very impactful to the whole game. Okay, part 7. What does Warren Buffett always say? Own assets. Own assets, right? How did Warren Buffett get so rich? Because he owns so many assets, right? So many great companies. He owns, flat out inside Berkshire's company, a bunch of different companies, right? But not only that, he owns a ridiculous amount of public companies. Alone, they have like $125 billion worth of Apple stock. It's an incredible amount, right? Ownership. Remember, when you are buying part of a stock, you are becoming part owner of that company. If you buy Berkshire Hathaway, Warren Buffett's company, right? And you buy stock in that, you are now part owner of that company. And so this is something to remember, that, and this is something I've touched on very in depth in a video I did about maybe a few weeks ago, maybe it was a month ago now. It was called This is Chess, and I have 16 queens or something like that. I titled the video, right? And I was talking about ownership and how each share you buy of a stock, right, you're increasing your ownership of that underlying company, which is very, very powerful. And never let that be lost on you, that you are acquiring more ownership of companies. Very, very valuable, okay? Own. Part 8. Remember, you were built to take risk. As a human being, you were built to take risk. And it is something that's built inside us. And sometimes we shy away from any sort of risk, but we're shying away from what we're built to do, which is take risk as humans, right? And, think about it, right? The days before, you could just go to a grocery store down the street and easily buy your ingredients and all the stuff you need, right? And your food and your supplies that you can survive, right? And way before heating and air conditioning and all that stuff, right? So imagine you lived in a very cold climate. Well, you needed to plant crops, and you needed to save these crops to get through the winter when nothing grew, right? And you needed to obviously cut down a lot of trees so you'd have wood, so you could burn the wood, so you could hopefully stay warm, right? And that's a risk. If you didn't calculate things right, you could die potentially in that situation, right? Imagine you live out in the middle of nowhere in a cold climate, and you don't have enough food to make it, right? Or you didn't cut enough wood to make it. You could freeze to death. You could starve to death, right? So these are very valuable lessons and things to remember. As a human, you were built to take risk. And so don't shy away from that fact, right? If, every single day people take lives in their own hands, right? When they go into an automobile, obviously people die in crashes every day and are seriously injured every single day in crashes, right? But folks are willing to take that risk. You understand the risk you're taking, which is your life in your own hands. And as humans, we were built to do that, right? And, I was just driving in the South recently, right? And one night late, I was driving back from Tuscaloosa, Alabama to Birmingham, Alabama. And what did I see? On the other side of the highway, a truck completely flipped the wrong way on the highway, and, it was a crash. And, I don't know what happened in that situation or who made it or who didn't. But, a few minutes later, all of a sudden I see an ambulance finally coming the other way. And, that's as humans, we're meant to take risk, right? And we understand the risk we're taking, so you can't shy away from that. And when you invest in the financial markets, you are taking a risk, and you have to accept that, okay? Part 10. Remember, there's so many reasons always to sell stocks. And I love these sorts of charts that show you over time all the different reasons, that you should have sold stocks, right? And this dates all the way back to 1950 here. And man, there's been a lot of reasons. And this isn't even all the reasons. This is just part of the reasons that why you should have sold stocks. And right now we have a whole host of a million different reasons why you should sell stocks and why you should be out of the market and things like that, right? But this is just incredibly helpful to look at and understand how much crap we've been through, and why there were so many different reasons to cash out and leave the market over time. And ultimately, you should have used every crash that you got as a buying opportunity. And if you did that, you did incredibly well for yourself, and you built incredible wealth over time, to be quite frank. Never mind if you got in the right companies that had great growth prospects. That's a whole different level we're talking about there, right? This was one that was done for a 10-year span, right? 2009 through 2019. And my gosh, we had a lot of reasons to sell. And I went through every single one of these. And, some of them were fairly ugly. That's the market. That's the market, man. You go through these cycles, you go through a lot of reasons to sell, and right now we've got a million reasons to sell, and that's why Wall Street has sold, right? And that's why all valuations have been pushed down, because there's a million different reasons to sell right now, okay? Part 11, remember, the market hasn't actually performed that amazing. There's a false assumption that the market's been this tremendous performer over the last number of years, and it just simply hasn't. This is a 5-year of the Russell. The Russell's up 12% in the past 5 years. 5 years, 12%. It's nothing. The Dow, if you pull up a 15-year chart of the Dow Jones Industrial Average, you're going to find the Dow in the past 15 years, is basically a little over doubled, barely over doubled, which, you would usually think the Dow would double like every 8 years. So the fact that it's been 15 years and we barely have a double on the Dow on a 15-year chart is pretty sad, to be quite frank. And so I want folks to understand, like, we haven't been in some high-flying market, to be quite frank. It's actually been a pretty lame market for quite some time, okay? Part 12. This might be most important, is there's a reason there's American flags there and there's Wall Street. You do have to understand that Wall Street, the stock market, is rigged to go up over time. And there's nothing wrong with that. That's the way it is, okay? The stock market has to go up over time. Why does the stock market have to go up over time? One reason is taxes. I had maybe $500,000 in gains last year that I had to pay taxes to the IRS on. It's great. The IRS makes a bunch of money off me. You know how much I'm going to pay in taxes on stocks this year? Nothing. You know how much I'm going to pay next year in taxes to the IRS? Zero also, because I'm going to have losses to write off, right? Voyager Digital, does that come to mind? That's like probably almost $300,000 just in itself, right? So I'm going to pay nothing to the IRS this year and likely pay nothing to IRS next year as well. So they're going to make no tax revenue off me, right? You see why it's important for stocks to go up over time? And that's going to be almost everybody. Other than maybe some folks that maybe bought, when heavy shorts and puts, I guess they'll try to make up a little ground. But the problem is that's going to be very small ground compared to the rest of folks, right, that are longs. So that creates a bad dynamic for the IRS. This is why the stock market has to go up over time. Second reason is confidence. Everybody looks at the stock market as a barometer to how the person in office is doing, to how politicians are doing, to how the overall economy is doing. And when the stock market's going up, people have this good feeling, they have confidence, they think people in power are doing good. It's another reason the stock market is rigged to go up over time. There's many other various reasons why the stock market's rigged to go up over time, but those are the two biggest reasons, okay? And so don't ever forget that. I think that's just very important for everybody watching this to understand those, okay? So, hope you enjoyed today's video as always, and if you're wondering why we're seeing all this, because there's no confidence, and there's everybody looks at the market, and the market's performing so bad, so they run to kind of, these justifications around depression, worst economic situation ever, okay? So, that's very natural in a very bad market, right? If the market was doing great, it would be a fully different situation, right? So, yeah, hope you guys enjoyed this video. As always, I appreciate you joining me. Financial Education Jeremy. If you want to follow me on Instagram and send me a message, send me a DM, say hello if you enjoyed the videos. I think this one was needed here tonight, and I appreciate everybody for joining me for this one. Much love as always, and have a great day.